What is going on, everyone? Welcome to this week's live. This week, we will cover trade recaps again, just continuing on the theme of walking you through my live trades, which is something I've also started to do on a daily basis on my TradingView profile. Sam_Mfega, if you guys want to check that out. But then obviously I know not everyone watches things on TradingView, so and that's normally like very detailed, but that gives like a I wouldn't say better, but a more live sort of breakdown, and then a bit of a forecast of what I think is coming next. And then this is a good sort of intermediate sort of reflection on those positions, just to again flesh out what the key insights and observations are as I look to refine my plan this coming weekend ahead of the $100,000 challenge starting next week. So this week, taken 2 positions so far, 1 loss and 1 that is floating, currently in profit. I've closed out half the position. I do that once price gets to 2R, and the rest then runs to full TP if it gets there, stops at break even. So I'll take you through those 2, and then I will do a bit of back testing on last week's mistrades on USDZAR. Because there's a few interesting things that I think I missed there. So the first trade, which was pound JPY, taken on Monday. We'll just go through the strategy optimization like I normally do, and then I'll just talk through what the insights were and lessons that I took away from this. So I guess just starting on the first one, was interbank price delivery algorithm noticeable? Yes, it was. I'll just mark it out now. So price, for context, was trading down in I just want to change this. Why do I change this color? I don't know. But price for context, this was the 1 hour range we're trading in. And so we were at the bottom of this range, not even at 50%. 50% would be somewhere here when I took the position. So definitely, just in hindsight, from a high level perspective, this trade was just a bit premature. And then when I look at the details, the algorithm was noticeable. This was our range, and I'll just mark it out. That was our consolidation, and we can see very well kind of characterized by this is annoying. Very well characterized by we obviously had this first low here, then the second low there, and up at the top we had this set of clean highs here. So we had definitely started consolidating in this tight range at the bottom of this distribution, and then we had the sneak below. And that should have really been the first sign to me that we've now swept sell side liquidity. Sell stops resting below here. both for those wanting to go short, but those that were long at some point and now closing out positions for now the move to the upside. So yeah, we swept that and then we started moving higher. I think the only reason I did consider the longs was because the nature, and I'll just highlight that to illustrate the sweep, is because the nature in which we started moving higher at was just very corrective. And for me, I just saw that as part of or an extension of this consolidation instead of the displacement we normally like to see heading higher. And then I was looking at this order block here as an area of interest to take the trade from. And so we tapped into that order block and rejected. And I think when we did tap initially, again, I got a bit confused because I was like, okay, we swept the downside. We had this order block resting above here. 1 hour range is bearish, so I was looking for sells. And so the sweep for me was almost a bit of inducement, but also confirmation that we were going to head lower. And then we started trading higher quite aggressively. Got into this order block, and then yeah, after we had one candle to the downside, and then wasn't 100% convinced with that. And then the second candle, which was more of a wick to the upside, and we still closed bearish. That's where I took the trade. Yeah, instantly kind of didn't work out and stopped me out at that position. But we can clearly see our consolidation, expansion, sweep of the lows, took out that sell side liquidity, and then we distributed to the upside. I think another sign was the way we kind of impulsed up higher into this order block. Yeah, that should have maybe set a few alarm bells in the mind just to say that we are potentially heading higher. It was also a bank holiday on Monday, so I think I did journal that there would typically be a lack of volume or liquidity on this day, and there was. I think you can see end of the day was somewhere here. So this was all just very corrective, and it's kind of rule of thumb that you just stay out the market when there's lack of liquidity, and then on your bank holidays there normally is. But I was just following the plan at the end of the day, and took the trade. So it was noticeable. Marked it out. Nature of the reversal candle. We had this engulfing and then a wick, but I waited for two. So I can just call it a double opposing secondary order block. It was just a 15-minute order block. There was no 1 hour order block there. Was there more resistance to the upside or downside? In this case, arguably upside, just because, or downside in this case, just because we were at these lows here. We had these lows to the left. We then swept liquidity there. Well, respected these lows, so didn't take out the orders that were resting below here. But then also just looking at the way price distributed, there was clearly more of a willingness to trade higher into this 1 hour low resistance range, which is from that break of structure level, well, between there and above here, where price ultimately broke above and then, respected, and then, we cleared that level. So in this case, definitely more resistance below. And then when did price complete protracting? That was also the key here. So if I look at the kill zone open, it was at this point here. This is arguably not the protraction. And so if price was bullish after we swept these lows, then we started trading higher. We swept this liquidity to the upside, and then literally a couple of like half an hour before the open, we started heading higher, counter trend. That was our protraction. We actually swept liquidity there, and then we distributed higher over the session, at least over the kill zone period, because then we consolidated slightly and then continued to the upside. So here we can say price completed protracting before the kill zone open. Or does the 1 hour EPD align with where the market protracts to? So obviously in this case it didn't, because we protracted lower. But if we look at the 1 hour, if we look at the 1 hour EPD and the range, this is our swing high down to our swing low. We weren't even at 50%, which is this green line above the order block. So that was another factor that I've noted made this a lower quality valid setup. The fact that we weren't even in that EPD in this case, because it's a bearish range, above the 50%, we're obviously in premium, which means below we're in discount. So I was essentially selling in a discount, which is where we see a lot more buying pressure. So yeah, here we can say no. Did the market distribute counter to the protraction? It did. We saw it protracted lower before it distributed higher. Was price still in the 1 hour EPD area or well on its way to TP? Was still in the EPD area. And I'll explain this. I think you'll see it more clearly when I go over the second one. But what we had on GJ was two sets of swings. We had this parent swing, which, as you can see, 50% level being the green level. We weren't at EPD as yet. And then we had the minor swing. As you can see, 50% level, we had achieved it. So we were technically at equilibrium. Our current sort of range or consolidation high is just below that optimal trade entry area. And so, but nonetheless, we were still in EPD. From a 4-hour perspective, was price in any 4-hour EPD or well on its way to TP? From a 4-hour perspective, we were not, just because the 4-hour trend is currently bullish. And I'll just illustrate that shortly. So you can see on a 4-hour perspective, we've been trading higher, high, 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 low, high, 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 low. If we pull our fib from high broke, we can probably say this region here. And even then, okay, so we'd say that's swing high. We pull down, 50% is our equilibrium. We had bought above that. So we could say we're en route to TP here. But arguably on this 4-hour swing, we had come down to optimal trade entry area, and then price had gone up and hit take profit anyway. But I wasn't looking at the bullish move on this. So I can just conclude that not in EPD on the 4-hour. How large was my stop relative to the average for this pair? My stop on this setup, was, I should be able to just do the math from the stop loss, but it doesn't show me. Rude. Oh, yeah, it was 40 pip stop, if I'm not mistaken. Let me just see if I can double check that against where I entered. So we entered here, and then we were stopped out. Yeah, it was 40 pip. Again, so 40 pip, but the average stop, still don't have enough data on GJ, but um, I know that it was a 40 pip stop. And then if I re-entered, in this instance, price continued trading higher, so there was no viable re-entry area. Even if I look at the candlesticks here, these wouldn't have given me a lot of confidence to enter. We had kind of pierced this order block to the upside, and it was, yeah, all outside. Well, this was near the end of that kill zone, so not applicable in this sense, in terms of if I'd entered again. And so just coming down to my routines for my tags. Give me a second. Coming down to my routines. It was 8. I was in bed by 10. Yeah, it was up at 5. Morning ritual complete. Got the nutrition in. Pre-analysis routine complete. And this was a New York session trade. Nutrition was right. In terms of psychology, I was euphoric at entry, but also very distracted. I was actually at the gym when I executed this. And I think that's another reason why I didn't pick up on a few signs that this was more of a low quality setup, that I shouldn't have had so much confidence in, because you can tell that being euphoric, I was clearly excited or amped that I'd gotten the setup and, I was executing. But if I had zoomed out, looked at the 4 hour, the 1 hour, the daily, even zoomed in, looked at the 5 minute and the 1 minute, it wasn't a great trade. And then just logging some mistakes that were made. There was just no volume on this day, and I'd questioned whether I should even be trading, given the lack of volume. So look, sometimes you can make a mistake and still and the trades still meet the plan. Mistakes happen. I think it's just more trying to track how often do those mistakes, or how much are those mistakes, or how much profit are those mistakes costing you? How often do those mistakes lead to losses? And then over time, trying to kind of filter out those mistakes. Post trade, disappointed, and TPO set at buy or sell stops. And I think post trade here, this trade affected me more than I thought it would. Just mentally, morale was very, very low. After being stopped out, I think after, in hindsight, looking at all the characteristics of the position that made it a low quality setup, and I think also just not following that intuition of just not trading on the day, really executing when I was distracted at the gym. I think it's a lot of these small things, or it becomes very like granular, um, in terms of the things you kind of just need to do consistently that will avoid losses or taking poor trades. And so I think because I'm becoming more aware of how these things affect, my overall performance, I'm just beating myself up a lot for still making the poor decision at execution. And I think arguably because the challenge is also coming up, I'm being a lot hard on myself with mistakes like this, and taking these kinds of trades because it's just unnecessary losses that you have to claw back when I've actually got a plan that works, and I'm getting good data from the plan. But it's minor things now that I'm just picking up, that are just really those tweaks that I think will take my outcome and my performance to another level. So that was the first position. In terms of setups, um, if we just remember, we come to the plan here. Um, Daily had mitigated EPD. Um, just expand that. Daily had mitigated EPD. 4-hour trend was currently counter trend because we were still in a bullish trend, but we were in premium or equilibrium rather. And then my entry was also counter trend, because no, my entry was pro trend. Yes, entry was pro trend. We had mitigated a 4-hour order block, and I didn't show it to you here, but I'll show it to you shortly. And so this was a sniper entry. Um, yeah, sniper entry. So that was the setup. In terms of playbook, I'll just add it to my interim high time frame. EPD was established, 4-hour trend established. 4-hour was within key indicator area. 1-hour wasn't. We were within New York kill zone. 15-minute actually didn't protract counter to my bias because the protraction was lower instead of higher. We got a 15-minute reversal after time-based liquidity sweep. We had a minimum 1:3R. We did not have any high impact news. And my exit was at, it was a 4-hour equal low, because I was targeting the bottom of this range here. I think I was targeting this one, to be honest, but we can actually just go back and see. TP was at 188.422. Yeah, in this region here. So TP was way down there. So yeah, that was the first position. And then yeah, you guys can obviously see we, after taking a string of losses, closed out. This is the part of the position that I closed out. This is the position that I'm currently holding long, short, I mean, at the moment. That's still open. And this one I'll take you through on TradingView, just because I think it'll just be easier to annotate. And so just looking at the bigger picture again, starting on the daily on this. This is the second position that I took on GJ. Check that out. Parent swing, minor swing. Minor swing is at equilibrium. hovering just below optimal trade entry area. Multiple attempts to break this to the upside unsuccessfully, but we did, however, get into minus swing equilibrium. Within that equilibrium, we have this order block here. Price failed to breach 50% of that order block. That is a sign that the order block is potentially going to hold, or at least if it's a valid order block, price shouldn't reach 50% of it. And so looking at how price is currently formed now, we definitely in a bit of a consolidation. And so we had price come higher near the range highs where we had previously rejected twice. I think we got up into that area on Friday last week, dropping down to the 1 hour. We got up into that area, time-based liquidity sweep, well, of this daily high, but then we had a minor sweep once we were in there and shifted quite aggressively, thus printing this order block here. And then this was just for context where the trade was taken that I just walked you through. You see really near those range lows. And so what I began to observe was firstly this range being established, and now on the day when I came to take the short position up here, it was either price wasn't actually in the order block yet. You can see we impulse quite aggressively up into there. We had formed this initial consolidation, sweep below, distribution higher. I then observed the next consolidation, sweep below the lows, distribution higher. This distribution was a lot cleaner. This is the kind of displacement that I was kind of looking for before. And then we were at the London Open consolidating in here. And for me, I was initially keen on this because I was seeing these two lows here to the left. And we had just printed these clean highs here. And you could see price had started consolidating or protracting slightly to the downside. And so I was looking at price to sweep this to the downside to then identify opportunities here to take it higher with take profit at this at the order block, the start of that order block. But then we didn't get that. We actually, at the open, impulsed higher quite aggressively. And I think that's something I did quite well on the day, which was anticipate kind of multiple scenarios and didn't kind of get discouraged when the original buys that I had didn't play out, and kind of just remained open to the opportunity that was still there. So we mitigated this order block, and we then had this bearish candle here. And again, I think what I'm glad I did was exercise a bit of patience, because we had the reversal candlestick, and arguably could have taken the setup. I just want to maybe come back a bit here, but on the 5 minute at least in that area, you can see it was just a straight run up, no clear shift of structure in this area as we started coming lower. And so that was initially a bit of a red flag to me not to jump the gun on this entry. We also did have this one-sided fair value gap here that price had traded into. And then once I saw the second minute 15, because I was thinking there's enough risk to reward for me to wait for the second candle to close, even if we do close, all the way down here, with my stops, above the 50% point or even above there. I think more so above here though. there was more than enough risk to reward to still get a 1:3. So I said I'll wait for the double opposing candle. If it prints, with enough and gives me enough confidence, and we didn't get that. We got the rejection, and then price swept liquidity again, pulled back deeper into that order block, and then we got this candlestick where the wick, this the wick, well, it was mainly the wicks, um, engulfed the whole of the previous candle. Again, dropping down to the minute 5, I don't think there was anything crazy here. There wasn't. The 1 minute, I think there was a market structure shift. But I think the main reason why this gave me enough confidence to enter was the position of my stop. With this first position, my stop was either going to be within the order block or slightly above, but most probably within the order block. And had I done that, even if I was stopped out, my bias wouldn't have been invalidated. And that's something that I'm looking to sort of implement, or I lean more towards setups where the position of my stop will invalidate that bias. And if we had traded above here, we would have been trading, above these 4-hour highs here, multiple rejections, and you know, could have just been a wick, but could have been a break higher. But we had been respecting these levels, and based on the higher time frame bias of we're within this tight range, I'm seeing price come below to these lows here, potentially sweep liquidity there, and then distribute to the upside. I said I'm willing to take this trade. I'm here with the stop position there because it gives me enough protection. And even if it does get stopped out, then it invalidates my bias, which I would rather have instead of taking, another unnecessary small loss. And then if another position or entry presents itself, I may not have that confidence in the position to enter again. And so entered the position. Fortunately, really solid entry. 1 hour move my stops to half risk, and then 2 hour close 50% and move to break even. And so on this position, I am targeting these lows here, these lows down here. It's the bottom of this hourly range. I don't think that's it's an overestimation of where price can get to this week. I think if we do see the break of this current consolidation, I anticipate price could get there fairly quickly, given the build-up that we have at the moment. But then I think just on a high time frame perspective, this is the consolidation that I'm seeing price get into. Even though we've been consolidating for a while, one thing I have noted is that we haven't really shifted for our structure to the downside. We were bullish this entire time, and then now we've gone flat. But that just gives me confidence that we're going to continue to the upside. One, because we've managed to respect the sell side liquidity. And two, on the daily parent swing, so this red fib here, we haven't reached equilibrium yet. So I think this is a large sort of generation of liquidity to then take price, whether we come below here and sweep these lows, or if we sweep these clean lows here, that's enough and we just move up. But I think this whole consolidation here is gearing up to take price a bit higher. And so that's I think what also supported the short position in this. Obviously it's within a range, but the 1 hour range is at least pretty well defined. But we've also got highs that are respected. And so if buy side liquidity is being respected in this sense, then if we do violate sell side liquidity, and I'll be more than happy to start taking longs once we get below these lows, because we don't need to necessarily get below these these extreme sort of 4 hour lows here. These clean lows here are more than enough. Um, but obviously, at the moment, while I'm holding the short, that's where I'll be looking towards. So if we get here and on these high time frames, we start showing signs of reversal, and on the minute 15, we start exhibiting that behavior of sweeping lower and heading higher. Then I'll take that as a sign that this was our liquidity grab. We've respected even within this tight consolidation. If I had to bring this um, up higher here to just these and these two highs that are formed. We've got two lows, we've got two highs. We've swept this low, and then we could be heading higher from that point. We may not need to come all the way here. Um, and so it's a combination of what's going on the lower time frame as well as the high time frame. I think just trying to incorporate um, as many of those elements as possible that sort of categorize high reward setups when the top down is in alignment. But it's just building a narrative at the end of the day. You never know how it's going to play out, but this position has played out quite nicely, and it's just these positions that um, I think when the overall narrative is forecasted in this way, it's these kinds of positions that I think I'll take a lot of insight and observation from, because it's more than just a minor move that didn't really speak to the lower time or the high time frame. There's a lot of things that have kind of happened for price to get to where it is now. Even within this consolidation here, we obviously had these clean lows. We had this one high. We swept just above the high. I was looking for scale in this fair value gap here, but price just didn't get there, and so I didn't get an entry. But if we then obviously continue displacing lower, then just the whole concept of how we generate liquidity and which orders we take out to then fulfill the opposite end or the counterparty's orders, those concepts just get a lot more reinforced as the way I'm following it on the charts kind of goes. So that was the second setup. The only mistake I made on this trade was that my position wasn't large enough based on how I calculate my risk. And that was because I used Euro USD instead of Pound JPY as the pair on my lot size calculator. And so took a slightly smaller position. That's why I think you guys saw here when I closed out at 2R, it should have been 0.25%, which was 22, 23 odd dollars. But yeah, that was only about 15 or so dollars. Um, so yeah, that was I'd say the only error and something that I don't want to a mistake I don't want to take going into the challenge. Just because position sizing um, is generally consistent, but it's not a mistake you want to make, especially if you end up risking too much. I think risking less is always better than more, but I also don't want to be limiting whatever upside I could capture on this move. So yeah, that's just a point to note. So those are the two trades for the week. And then finally, I think just in the last bit of this, I'll take you through USDZAR last week, how price developed, what trades I missed, and yeah, what trades were available essentially. So if we just come to what I'm looking for. So backtesting last week, the main focus was to obviously observe market distribution for the week. Basically what high time frame key indicator areas the market gravitated towards. And if my analysis aligned with this was the high time frame analysis I had for the week. So I'll walk you through that for GJ. And then what I was basically observing was the market maker false breakout, which is what I was just showing you guys on the pound JPY trade, where we have a consolidation, we sweep liquidity to one side and we distribute to the opposite. Consolidation, sweep, distribution. If you look on your charts and you mark it out, you'll see this as a recurring theme. But one thing I have noted about the market maker false breakout is I've had to redefine the way that I sort of characterize consolidations. It's not just this tight, pretty looking consolidation that you can easily identify. Sometimes it looks a bit messier, but it's all about which direction we get the false move in, that price sweeps liquidity and doesn't continue distributing in that direction, and then obviously expands in the opposite direction. And then obviously you can then make out what the consolidation was before that based on when we stopped impulsing prior to that consolidation. So I observe that up till price reaches that key level, because continuing on one of the points that I discussed in my weekly review, which was focusing on high time frame key levels, I'm looking for how price trades towards these levels and away from these levels. And I think in back testing that, I'll be able to differentiate kind of the key sort of tendencies when price is still gravitating towards a level. And then once we mitigate that level and continue, how the nature of prices is kind of different. And then once I've observed that, I'll zoom out and identify any missed trades, both winners and losers, and trades that met my plan as well as those that didn't meet my plan. Off the bat, I'll tell you USDZAR, none of those trades that I'm going to identify now, if any, met the plan. And I'll explain to you why in a bit. And then where trade opportunities were present, I'll log the 5-minute and the 1-minute price charts at entry. That's just a newer observation that I'm trying to make. And then I'll identify which criteria was met from the intermediate perspective as well as from the short-term perspective. So these two speak to ICT's concept of selecting or criteria of selecting high reward setups. There's the long-term, or I think high time frame perspective, which is centered around fundamentals and more macro analysis, which I haven't really started diving into or delving into yet. And then there's the intermediate and the short-term perspective. So with the intermediate, you'll see I need at least two components in agreement to formulate a strong bias, either top-down analysis, which is monthly, weekly, daily, and I need two of those, at least two of those to be in agreement. Commitment of traders data, which is a fundamental sort of perspective. I'm not really looking at that now, as well as market sentiment. Again, not really looking at that now, but that's more typically you'll have either very strong market sentiment, like at the moment we have a very strong bearish dollar market sentiment because of the anticipation that we're going to cut rates soon. So that's naturally devaluing the dollar. But that's a clear market sentiment. You're not buying the dollar at this point unless you're dollar cost averaging. But to where, I don't know. But there's a strong sentiment at the moment that the dollar is bearish. And so that covers the intermediate perspective. On the short-term perspective, this is more technicals. need to have all three in agreement to formulate strong bias, preferably one of each. Correlation analysis. For this, I look mainly at the dollar index and how that correlates to the pair that I'm trading. With USDZAR, see it's a positive correlation, but with USDZAR, it's not as strong as Euro USD or Pound JPY, just because the Rand is quite a volatile pair. And so it really weakens the correlation between the actual USD-ZAR currency pair relative to the dollar index. But there are pockets of price where, or where there's a lot of volume in the dollar that, yeah, they do follow each other's movements. And then time and price theory, quarterly effect, monthly effect, weekly range, power of three, daily range, time of day, obviously needing at least one of these. So I particularly mainly look at the time of day, which is the kill zones that I trade in. That speaks to IPTA as well as the daily range, power of three, accumulation, manipulation, distribution, which is IPTA in another, just described differently. Quarterly, monthly effect, haven't really gotten into that too much. And then obviously the interbank price delivery algorithm, IPTA, that's what I'm looking for. So all those kind of need to be in alignment. And then, yeah, I just have some examples here just to kind of show me what I'm looking for. And this is also just a good reminder for me when I'm struggling to identify consolidations, just referring back to this and looking at, how he's mapped them out in these examples, because this is kind of what I was saying, where it's not your typical consolidations that you think. It can be a lot broader than that, but the key is just there are always signs like these clean lows here, market dip just below that before we expanded higher, formed two strong lows. There was only one high. That one high is also important, that sharp high, because that's then used as your take profit areas when price eventually does come back. So those are just for reference. And then I just want to take a screen grab of this, and then we'll jump into identifying if any setups were available. And then we'll see how many we can get through in the next 10 or so minutes. Because I'll be honest, my bandwidth is shot after today. It was just a very crazy day. But yeah, you can see I improved my charting and stuff for this one. Okay, so what I've marked out are in the yellow are the consolidations. The red are our runs of liquidity. This just needs to be bolded. And then the green is our distribution, so our impulsive legs. And then, yeah, and you'll see wherever we have a consolidation, we don't always have a sweep of liquidity. But obviously I'm looking for the pockets of price where one, we consolidate, two, we sweep liquidity, but don't displace through. It's just a sweep and then a rejection. And three, lining up with my kill zone times, because that's when I trade. And so if we get that and we out of those times, then it's not a position I'll consider. Why I said earlier that this whole move was not or was not valid last week, or why I wasn't looking at a move, was because if we go to USDZAR, you'll see this was the, from up here, which is, and we kind of consolidated through that. No, sorry, it was this one. Mining. This was our swing. It's gonna let me. We came up to OTE, and then we came and we hit TP. So technically we aren't an EPD, and at this point here, below the range, we hadn't started establishing a move towards that optimal trade entry area. Only after this candle close here, because remember, I look for the extreme low and then I count 1, 2, 3, 4. The fourth candle needs to close above the candle that formed that low, and then I can say that we've established a low that I can then project a new fib to, so swing high, swing low, to then look for price to get up to at least equilibrium. And as per my plan, just coming back to it, the plan, if price isn't at EPD, I ask myself if the 4 hours established a trend towards equilibrium premium or discount. If it hasn't, there's no trade. Last week we hadn't, so there was no trade. But then obviously once we broke higher and we closed on the daily, like I showed you, on the 4 hour as well, we then traded up, consolidated a bit, traded up beyond that high. I was still wary here. And then this was the real move that made me say, okay, cool. We've established a 4 hour trend higher. Then, USDZAR, I think it was probably Thursday, Friday. Yeah, Thursday, actually. Came back on watch and I was looking for setups. I didn't end up taking anything. But yeah, we were starting to trend higher up into that EPD. So, and then obviously after that, we just got this massive sell-off, which then came back below these lows, which, yeah, made this invalid again, technically. Hence, the setup wasn't valid, and I wasn't looking for anything. And so, yeah, let's look at, and the purpose of this is for me to just basically identify, were there any setups that were valid that I could have potentially taken that are falling outside of my plan. So I can also take note of the setups that I'm missing that my plan doesn't allow me to take. And if I see enough of a recurring theme in those setups, then I can start incorporating them into the plan. So just looking at this position here, consolidation, we swept above, we had the time-based liquidity sweep, and then we distribute it lower. If, for example, and I'll base the entry on the minute 15, because obviously I don't take anything on the 5 or the 1 minute yet. If I'd taken this here and I had a stop, typical stop of 400, let's see, it was 1:2 down to these equal lows, so I could have closed 50% there. And then look, 1:3 was way below here. So technically in this run, there was a 1:3 setup, even though I may not have caught the whole run. And I can tell you now I wouldn't have. But look, this is an entry. But I want to build more, or at least identify a bit more that's in this area that I can use to look for an entry, because I don't just look for a 15-minute time-based liquidity sweep. There was nothing really to the left here that says price was maybe at an order block or we were sweeping daily liquidity. We're just kind of correcting very slowly to the downside here. And so arguably at this level, because what I want is at least a 1 hour or 4 hour order block, even for setups that don't fall in my plan. What we can see here is an order block. This is New York session. Yes, consolidation, expanded higher. Very large sort of violation of this, well, compared to this consolidation. I think on the minute 5, this would be a lot clearer, but again, don't really look at the minute 5 there. But if we also consider this 1 hour range, 1 hour range up at the 62% level, 1 hour order block overlaps with this 15-minute one-sided fair value gap. I think I already had that on. I did. Where would I have taken it though? This was the open, arguably on this candle. How would I have known? I probably would have waited for this candle here. At the time, I wouldn't have taken this as the consolidate as the as the sweep of liquidity, just given how much smaller this is compared to that. I'm deliberating too much, which for me is a clear sign that if I'm hesitating so much in hindsight, and it's normally in hindsight when we see setups very easily, but if I'm struggling to even make sense of the setup, I can see that it comes lower, but I'm also trying to be very practical with would I really have taken it or not at the time. So trying to simulate that sort of decision-making process. And I think it's a bit harder just because there's nothing, this already doesn't meet my current plan, even though it is a valid setup. I'm seeing there are confluences here, the one-sided fair value gap, the 1 hour order block, prices trending lower already. Obviously we at, this is a 15-minute range, arguably. but it's also about the high time frame, what price is doing there. Um, Also, if I had taken this here on this candle, because I said, look, I would have waited for this stops above here, probably 6 to be on the safer side. Um, Looking for 1 is 3 minimum. It's because we are already at extreme lows. I would never have set my take profit so far, not knowing what I'm targeting. If I was targeting these lows or at least sell stop orders, then I would place it 400 pips below this low, which is, if this is 285, then it would be at about 685, which is like a 1 is to 1. Um, and beyond that is a bit of an unknown. And we didn't turn very far beyond that. We got to about like a 1 is to 2. So I don't think I would have taken this, to be honest. Or even if it's a setup that I missed, which I can see that I clearly missed it. I don't like, there's nothing there that I can see, at least from a high time frame, that would give me confidence to take this kind of setup again. The timing's right. The way it looks now on the 15-minute is right, but uh, arguably you come up to the 1 hour, there's an order block there, but beyond that, again, not too much in that setup. So I'll pass on that. Look again. This was pretty clean because we swept these old highs and then we sold off. But this does fall outside of my kill zone area. This would have been at 7:30. Kill zone ends at 6. So arguably while we were still consolidating here, um, no, wouldn't have taken that. Again, then this just expanded. No real consolidation. This was during Asian session, literally at market open. Wouldn't have taken this. Yeah, there was not really any clear setups that I would have taken in this whole range, just looking at sort of the market maker false trap breakout, looking at where for time-based liquidity sweeps, before then obviously taking an entry. And yeah, in this case, the plan would have protected me. There were obviously trading opportunities if your rules were looser in terms of when you can take a setup. And I'd say arguably the only other decent trade was around here on Wednesday on the way up. But this was the low. If we had run liquidity here within this order block and then gone higher, then I would argue more for this position here, but we just didn't get that confirmation. And it actually played out quite nicely that we obviously formed this consolidation, broke to the upside, and then I think the retest comes to some magnitude back within that consolidation. So that was really the only other potential setup, but it didn't play out, and I'm not too sure how it looks on the 1 hour. Um, but yeah, I think to confirm that, besides this entry here, um, which look, I say now questionable, but once I maybe start getting onto the much lower time frames, which I think as I progress on ICT's mentorship, I will, then these are things that may start to make more sense. Maybe there's something in here. Look, I can definitely see a setup here, but maybe there's certain criteria that I don't look at yet, that will make something like this a lot clearer, will make something like this a lot clearer, because there is the opportunity. But in the same breath, again, I'm looking for the key insights that I'm going to use to refine my plan this weekend. And I don't at the same time want that to be drastically different from what I'm already doing now, because then what's the point? It's not a refinement at that point. Um, I don't want to enter the challenge trading a different strategy. I almost just want to dial in on the strategy that I'm trading now. So while I am looking for setups that didn't meet the plan, um, it's more variations of setups that didn't meet the plan. If here we were within a 4-hour key indicator area, within a proper 1 hour range, and we got arguably cleaner price action at execution, then yes, I would have taken that, even though the daily wasn't at EPD. I'd rather have one or two criteria not met than a whole host not met and only like one or two things that look nice on a setup. Um, so yeah, that is the position. But again, hope you guys took value away from these detailed trade breakdowns. We're etching closer, when we connect this time next week. We'll be in the challenge. Potentially would have taken some trades, and yeah, looking forward to it. But I think key for this week is keep your eye out for the weekly review. That's gonna showcase my plan heading into the challenge, and all the refinements that I'm kind of logging now, what those will translate into. And so really looking forward to finalizing that and ultimately starting the challenge. Yeah, the reason we've been doing these, the reason we've been so consistent with it, um, was all because of for this goal that we're now working towards. The goal is not the end, though. The end is to obviously become consistently profitable, to pass challenges, to withdraw, build our own personal capital, um, and and so yeah, this has been a big contributor to um, improving as a trader, as I've kind of built this plan, and yeah, taking you guys kind of through it every step of the way, which is pretty cool. So don't forget, guys, consistency is the choice you make when you start doing the things you know you should be doing.